New York City was pro-slavery right through the end of the Civil War. In January 1861, on the eve of the Civil War, the South seceded from the Union. At this time, New York City Mayor Fernando Wood recommended the secession of New York City. Mayor Wood wrote, "With our aggrieved brethren of the slave states, we have friendly relations and a common sympathy." Slavery was introduced to New York City in 1626. The Dutch established a colony that included 11 African slaves. The Dutch continued to import slaves. The children born of these African slaves were also slaves. Slaves constructed a fortified settlement known as New Amsterdam on the southern tip of Manhattan. When the English captured the city in 1664, there were approximately 800 Africans, both slave and freed. The British instituted chattel slavery and all of the Africans became slaves. The British imported thousands of slaves from Africa and the West Indies to New York City. New York City became the largest slave-owning colony in the North. The city's economy was based on supplying ships for the international slave trade. Besides transporting slaves, the ships also transported the products of slavery, such as sugar, tobacco, indigo, coffee, chocolate, and ultimately cotton. In 1703, more than 42% of New York City households held slaves. Slaves worked as domestic servants and laborers. They also worked as artisans, they worked in shipping, and they worked in a variety of trades. Slaves built the roads, the docks, and most of the important buildings of the early city. They cleared land, built a fort, mills, bridges, the first city hall, the city prison, churches, and the city hospital. By the mid-18th century, approximately 20% of New York City's residents were slaves. In 1711, the city built a slave market which was called the Meal Market at Wall and Water Streets. New York City, as a major port city, played a central role in the transatlantic slave trade. The market's purpose was for hiring, buying, and selling slaves. African slaves who were in chains disembarked slave ships after a transatlantic crossing at Pier 17, today known as the South Street Seaport. These newly arrived African slaves were auctioned at the meal market. The companies that insured, outfitted, and owned the boats used to carry Africans from their homelands to enslavement often traded on the New York Stock Exchange. The slave trade was big business, and New Yorkers made huge profits from it long after slavery was made illegal in the state. New York City had the second largest slave market in the country, second only to Charleston, South Carolina. In 1790, there were 7,795 slave-owning households with an average number of 2.7 people in bondage in those households. In the immediate rural hinterland, including today's Brooklyn, the proportion of slaves to the overall population stood at 4 in 10, the same as Virginia. In 1827, New York State abolished slavery. As the northern state with the largest number of enslaved people, New York was the second to last to eliminate slavery. New Jersey was the last. But New York City did not end its connections with slavery. The state and the city's economies were linked to the southern states with large populations of slaves. Warehouses along the city's waterfront were filled with the products of slave labor, such as cotton and sugar from Louisiana. The products of southern slave plantations, such as cotton and sugar, were shipped to New York's harbor before being shipped across the Atlantic to Europe. New York banks such as J.P. Morgan financed southern slavery. New York banks extended credit to southern plantation owners, which allowed them to purchase slaves and cover their expenses during the cotton growing season, from planting cotton to selling cotton. New York insurance companies such as Aetna and New York Life insured southern slave owners against the loss of their slaves. New York lawyers did business with southern slave owners and slave ship owners. New York shipbuilders constructed and outfitted slave ships. Slavery brought tremendous wealth to New York City. Until the Civil War, freed blacks were frequently kidnapped in the streets of New York City and sold into slavery in the Deep South. Nostrand, Bergen, Stuyvesant, Many of New York City's streets and neighborhoods are named after families who owned or traded slaves. The recent discovery of the African burial ground in Lower Manhattan reminded Americans that slavery in the United States was not merely a phenomenon of the antebellum South. In fact, for most of its history, New York City was a slave city. Slavery made New York City wealthy. In the 1800s, raw cotton was a key component of Britain's Industrial Revolution. A series of technological innovations, such as the cotton gin, made cotton the fabric of choice for Britain's clothing manufacturers. By 1831, the United States, in particular the Deep South, was the leading global supplier of raw cotton. The British textile industry was dependent on southern cotton plantations. In an effort to expand cotton production, the federal government removed Native Americans from their land in Mississippi. The removal made 18 million acres of land in Mississippi available for cotton production. The federal government then sold the land to white settlers at a cheap price. These white settlers purchased slaves from Virginia and Maryland to grow cotton in Mississippi and other parts of the Deep South. New York financial institutions such as J.P. Morgan financed the purchase of slaves. And New York insurance companies such as Aetna, AIG, and New York Life insured these white settlers against the loss of their slaves. The value of slaves was rising along with the price of cotton. In the 1830s, powerful Southern slave owners wanted to import capital into their states so they could buy more slaves. They came up with a new two-part idea, mortgaging slaves, and then turning the mortgages into bonds that could be marketed all over the world. Southern slave owners organized new banks in states like Louisiana and Mississippi. They created a list of slaves they wanted to use for collateral. Then, the slave owners mortgaged these slaves to the bank. The loans they received allowed them to purchase more slaves to increase cotton production. Southern banks such as Citizens Bank and Canal Bank of Louisiana allowed slave owners to offer their slaves as collateral for loans. These two Southern banks would eventually be purchased by New York bank J.P. Morgan. A slave-backed loan could be acquired in two ways. First, slave owners could take out a mortgage on the purchase price of a slave by putting a percentage down and paying off the balance over time. Second, slave owners who already owned slaves could use those slaves as collateral for a loan. The loan proceeds could be used to purchase additional slaves. These Southern banks, in coordination with New York financial institutions, bundled slave-backed loans to form bonds that could be sold both nationally and internationally. The sale of these bonds created capital that could be re-injected into slave-backed lending. Investors in New York, London, Amsterdam, and Paris, by purchasing slave-backed bonds, could benefit from slavery without owning slaves or violating anti-slavery laws. As the slave owners make payments on their loans from the sale of cotton, bondholders receive payments of interest and principal on their bonds. The infant American financial industry, wrote historians Edward E. Baptist and Louis Hyman, nourished itself on profits taken from financing slave traders, cotton brokers, and underwriting slave-backed bonds. New York City provided Southern plantations with more than just banking and insurance services. New York factories produced the agricultural tools that were used by slaves on Southern plantations. New York clothing factories such as Brooks Brothers produced the clothing that slaves wore on Southern plantations. Ships that originated in New York carried slaves from the Chesapeake Bay region to New Orleans to be sold at slave auctions. As the cotton trade expanded, New York City became the central port for shipments of raw cotton moving between the American South and Europe. Ultimately, 40 cents from every cotton-generated dollar went to New York City to pay for the financing, transportation, and insurance of enslaved people and the cotton and other products they produced. Cotton and slavery made New York City wealthy.